Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, August 14th, 2019. We are now in the final hour of the trading day. This is the time of the day where the large financial institutions and market makers take over control of the market and close the market at what I believe is the most valid prices of the day. And that is why I like to make my buying and selling decisions from those closing prices. That's why I'm an end of day trader. A lot of the prices during the day I consider just to be noise, and at the end of the day, when the market makers and large financial institutions close it there, that's what I feel is the most valid prices. So anyway, okay, well, we are having quite a day again. The volatility lately has been insane. So I hope everyone's keeping safe out there, position sizing correctly, conservatively, so that if we do get these big days against us, that it does not disrupt our mental focus and our stabilization, and does not hurt our trading accounts too much, so that we have the ability to hang in there, take the next trade when it comes along, and hopefully recoup the losses. So we are down a mere 725 points right now. It's unbelievable these last few days, the ups and the downs. So yeah, the Dow is down 2.75%. The Nasdaq is down 2.85, and the S&P is down 2.68. So we are having one heck of a market again. Boy. So let me just make sure everybody can hear me okay. Hey, Frederick's here. Good to see you, Frederick. That's our friend Frederick from France. Hope you're doing well over there. Boy, what a day again, huh? What a day. So listen, the plan for today, as usual, is first of all, we're going to go through, we're going to run the U.S. legal disclaimer. It's about 40 seconds. We're going to get that out of the way. We're going to come back. We're going to look at all my my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them moving forward. Then we're going to do just a few minutes on trader psychology. I mention this every day, but I believe that the psychology of how you approach trading, what goes on between your ears and your brain, is going to make the difference between whether or not you're going to be a long-term successful profitable trader, or you're going to let fear, emotion, greed get a hold of you, and you're going to make bad trading decisions when something goes wrong. And in my experience of trading for 24 years, that is when you lose the most money, is when you become destabilized, when you've had big wins or big losses. When you have big wins, you feel invincible, you have no fear, you put on too large of positions. When you have big losses, you're like, screw it, I'm going to make this back, I'm going to double up, quadruple up on my positions, try to make it back. It never works, people. I'm telling you, it does not work. So knowing the technicals of the charts, the setups is important, but the most important part is keeping yourself stable. Do not let yourself become destabilized by huge wins, huge losses, making bad decisions. And it all starts with position sizing. If you position size correctly and you don't have too much correlation, when you have big down days like this, they're unfortunate, but they're recoverable. You know what I mean? They're recoverable, but you have to look at each trade as the next one of 1,000 trades, not get too emotional about it. Don't let it upset you if you have losses, and continue to take the trades when you have when the setups appear. But don't try to make it. Don't risk your whole lifestyle on one trade. Don't risk your whole trading account on 1 month because you had a bad month. Please, just from my experience doing this, the key to staying in the game, everybody, is to position size conservatively. Let your edge play out. You're going to have wins, you're going to have losses. It's just normal part of the randomization of the market. But if you have an edge, that edge will work for you in the long term, but you have to stay in the game in order for that to happen. So anyway, we are going to do a little bit on trader psychology. After that, we're going to come back. We're going to take a look down through my watch list. We're going to look at each stock. We're going to take a look at the technicals, support, resistance levels, ATR channels, RSI, MACD, V1, V2s, risk to rewards. We're going to look at it all, and we're going to see if there's something that looks like a good potential candidate or candidates at the end of the day. So, and then after the market closes, if anybody has any questions whatsoever about what I discussed today, please let me know. I'll try to clarify it for you. Just type it in there in the chat. If you have any other questions about even if it's something that I haven't discussed on this live stream, please let me know, and I'll do my best to help you out with that. And or if you want me to take a look at any particular stocks that you have, I'm happy to do that as well. So, all right, so that is the plan. Let's get the U.S. legal disclaimer out of the way, and I will be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All righty. Steve Burns is here. Hey, buddy. Good to see you. Thank you for coming by. It's always an honor. Steve says, being in all cash yesterday was frustrating, but being in cash today is a great feeling. Yeah, Steve was I was thinking about that, Steve. I mean, we did have a big day. You were in cash, and I was like, I bet he is frustrated. But as it turned out, you wait one more day, and you're super happy because we are lower than we were yesterday. It's a great feeling to be in cash. I wish I was all in cash at the moment, but you know, one of the best feelings is being in cash when the market's going down and you sit on your hands and you're real patient and you're waiting for those really good dip buys to give you a good risk to reward ratio. You know, it's a double win because you don't have any emotion in the market, because you don't have any positions. And by the way, you know, the only time you really don't have any emotion in the market is when you're out of the positions. That's when you can think the most clearly. So Steve's all in cash. He's thinking very clearly. He's stalking the market. He's waiting for a really good setup. And I hope he gets it. So Steve also says, being on tilt, a poker term for a state of mental or emotional confusion or frustration in which a player adopts a less than optimal playing strategy, usually resulting in player becoming over aggressive. 100%, Steve. You know, Steve, I played poker probably 5-6 times a week for about 5 years. And so I am very familiar with poker. And, you know, it's interesting because just like with trading, you have, you know, 6-7 people sitting around the table. You know, the ones that are like really tight grinder players. And even if they get a bad beat, they have a great hand, but they get sucked out on the river. The people that I would give my money to play poker are the ones that go, all right, good hand. And they continue to play tight. They continue to play well. Then you have other people that are like really great poker players, like phenomenal poker players. But the weakness that they have is that if they get sucked out on the river, if they get a bad beat, it all goes out the window. And then they're just mad, they're pissed, and then they just like Steve just said there, you know, they become over aggressive. They don't care. And I would much rather take the decent poker player that never goes on tilt compared to the great poker player that every once in a while when he gets a bad beat, he goes on tilt and just dumps chips and loses composure. And it's the same thing with trading. exactly the same correlation with trading. There's some really great traders but when they take a big loss, they become destabilized, and all their good trading principles go out the window. I would much rather give money to manage to someone that, like the poker player, said, "Oh, that's unfortunate," doesn't get destabilized. So I talk about destabilization a lot, but it's so important, everybody, because when you become destabilized, you make bad decisions. You make bad decisions, and bad decisions are what's going to beat you up and make you have big losses in the market. It always happens that way. So again, let me just say one more time for the 100th time. Position size correctly. Take the long view of trading. If you position size correctly, even if you have a day like today, it's not going to beat you up too bad. And that's one advantage. But more importantly, it's not going to destabilize you. You can trade great for 6 months and then just go off the reservation for 1 week where you're just doubling up and tripling up because you're trying to make it back. Please don't do it. If you position size correctly, keep your mental wits about you, take the long view, you're going to do okay in this game. But it's weeks like this where, people are going, to quote another poker term, they're going all in and going, this is it. The worst feeling in the world for me is going all in on a stock. Like, this is it. Is it really it? Do I really know it's the bottom? If I hit the bottom, then great. But if it goes down, then what do I do? I already determined that it was as low as it's going to go. Now it's going down more. What am I going to do now? Sell? I spend a lot of calories keeping myself out of those positions, everybody. So Frederick says, hey Steve, cool that we have Steve here, huh, Frederick? Hey Mount Doji, how you doing, buddy? Mount Doji says, I'm just learning poker, actually. Okay, well, a lot of similarities between trading and poker. I know a lot of poker players that are traders and vice versa, but it's the same thing. Playing well, trading well, playing and trading when you have an edge, not getting destabilized. This is the next trade of the next 1,000 trades, or this is the next hand of 1,000 hands. So anyway, all right. Well, let's take a look, see what's happening today. All right, here we go. DDM. So I bought DDM back here on the 6th of August. The reason I bought it because the previous day we had a close below the 250 and then it closed back over the 250. This is a good long-term mechanical approach. I don't trade this mechanically. I trade this discretionarily, but I use the entry, the close under and the close back above the 250 as my entry. And this is a good example here. I mean, you can see today it looks like we're going to close under the oh, I'm sorry. I am trading this one mechanically. I was thinking about Amazon for some reason. Yes, I am trading this one mechanically. So under the 250, over the 250, I stay in until it closes below. So it certainly looks like it's going to close below the 250 today. I'm going to have to get out of this trade. But this is a good example of why I like to phase out, because you can see after we bought it, we had a couple big days up. We had 2 profit targets here. We had 3 profit targets here. So 50% of my position I was able to get out of in profitable areas. So yes, it's down big today. It's down 5.22% because it's double leveraged. But keep in mind that from yesterday's close down to here, I only had half of my position. So is it going to turn out to be a loss? Yeah, a very, very small loss, but it's because I phased out of here, right? So I hope that makes sense. So yeah, definitely going to have to get out of this at the end of the day with the close below the 250. Now we are under the 250 and now we are under the 200. If I get another signal with the close back above the 200 or close back above the 250, I'll go and take it again. And again, it's important that if I had a huge position in this and bought it right at top and it got, and it got crushed like it did today, would I want to get back in there? No, I wouldn't. And there's a good chance that I wouldn't get back in. But just because something didn't work last time doesn't mean it's not going to work the next time. So Out of 50% of this up here in the profitable areas because of the phasing, I will be getting out of this today with the close under the 250 because that was my plan, right? And I have to stick to my plan. Johnson & Johnson. So I did buy Johnson & Johnson back here on the 8th of August. I bought it because we had this top here with two lower highs to the left, two lower highs to the right, fractal. We also had a V2 here is day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. Same thing here. I phased out one here, got a couple more phase outs up there. It is currently under where I bought it. I bought it at 131.68, but it's going to be close to a scratch trade because I've got out of, I got out of a good 40% up here in the profits, which mitigates the losses. So again, this is another example of why I like to phase out. If it keeps going up, I'm still happy because it's going up. If it goes down, I'm kind of happy I got rid of some. When the market wanted some. I always like to sell some when the market wants it, and I'm happy to give it to them. My trailing stop on this was yesterday was a close below yesterday's low or a close below the 5 or the 10-day moving average, and it is closing below both of these, it looks like, obviously today. So I will be getting out of this trade today. Frederick says, Greg, what do you say to a know-it-all about trading? I have a friend of mine, he is like that. He advised me to crash $5,000 to learn something. There's a lot of know-it-alls in poker. There's a lot of know-it-alls in trading. I don't quite understand what you mean. He advised me to crash $5,000 to learn something. Maybe pay $5,000 to learn something. I don't know. I would be suspicious of that. There's no secrets in trading, Frederick. There's no secret that you're going to pay $5,000 for and you're going to go, aha, I have the secret of all secrets now. It literally is what I'm telling you. It's minimizing losses, letting profits run, adhering to your trading plan, position size correctly. That is the secret to long-term trading success. And I'm telling you that for free. So a lot of people have this desire to learn the secret method. There is no secret method. There's no secret method, Frederick, I promise you. So I would be leery about that. So Johnson & Johnson, I will be getting out of this today. It was a decent trade to the upside. We phased out. All in all, this is going to be pretty close to a scratch trade, and I'll take a scratch trade any day. Remember, big wins, scratch trades, small losses. Those are the results that you need. You just need to stay away from the big losses. It doesn't even enter my mind about, I'm just going to stay in this and see what happens. No way. Could it go up tomorrow? Absolutely it could. But, you have to feel good about yourself and congratulate yourself when you follow your plan, because that is what's going to make you a profitable trader in the long term, is having a decent plan. Doesn't have to be the greatest plan in the world. Doesn't have to be a secret $5,000 secret plan. You can have a decent plan, but, congratulate yourself on days where you follow your plan. And this is my plan. Big reversal today, closing below previous day's low in the 10 days. So I'm going to be out of Johnson & Johnson at the end of the day. Merck. All right. Well, another example. I did buy Merck back here on the 31st of July. I bought it because we had earnings. It gapped up, reversed back, but it held the previous high. We had a 5 EMA, 20 EMA cross. We had MACD go positive on the day that I bought it. And also, probably most important for me on that day, the market was down huge and Merck held up on that day. So the relative strength. But you can see this has been a really nice trade. We phased out. We hit a couple profit targets yesterday. I was just waiting for some kind of reversal, close below the previous day's low, or close below the 5-day moving average. Well, we got it today, but it still was a nice profitable trade, right? Bought here, we're going to be getting out the profit, but on top of that, we scaled out at these much, much, much higher prices. So again, this is why I'm such a great fan of trading. For my personality, may not fit yours, but for mine, it works really well. So definitely big reversal bar today. The market's telling us something. Could it go up tomorrow? Sure, it could. Could I say, maybe I'll hold it to the 50 or I'll hold it back to where I got in? Yeah, but it's not my plan. You need to get your plan. Doesn't have to be great, but follow it every day, and you will feel good about when you're following your plan. And after a while, the thought of not following your plan will feel really bad to you. Like if I held this today, oh my gosh, I don't think I'd even be able to sleep, just for the very fact that I broke my plan, right? I broke my process. So anyway, Merck's been a good trade. I think that was Amazon. We'll be getting out of Merck at the end of the day today. All right, Microsoft. Well. This was I did buy this yesterday on the 13th of August when we had this nice higher low V2. You can see this low here is higher than this low. We came up. In addition to that, we had a beautiful V2. Here's day one, day two. Day two washes out day one. Day three closes above day one. Closed above the 50 RSI, closed above all the major moving averages. This was, this was a completely legitimate trade the way I trade. However, no matter how good a trade looks, everybody, it doesn't mean that it's going to be profitable. In the long run, you take this trade 100 times, you'll probably make money on it 65, 70% of the time. But there are times when you're not going to make money on it, even if it looks good, because every trade literally is a coin flip. Over time, there's an edge if you have a good setup. But, any one particular trade, you never know. So, I did take a full position on this. I did take a 10% position size. But, what about if I said, oh, this does look good. It's a higher low. It's up, it's above the 50. It rejected the 50. It has a V2. It's in the value zone. It was on high volume. Maybe I'll double up or triple up. I would be in bad shape today, right? Again, it's not about one trade. It's about many, 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 many trades and extracting the edge from those many, many trades. So this is unfortunate, especially because it was a full position. But, what was my stop? Well, my stop was halfway of the washout bar. Here was the washout bar, day one, day two. Day two washes out day one, day three closes above day one. Perfectly legitimate, lots of things going for it. But it is closing below halfway of, I guess the washout bar was more right about here, halfway. But yeah, it's lost the 50 day. Now it has a lower high above it, lost the 50. This isn't good. Did get a dividend on this today, at least, of 46 cents. But yeah, it's a monster down day. So I'll be getting out of this at the end of the day. But look what's happening here. Now we have a lower high. We've lost all the moving averages. We've lost the 50 day, which is important. Looks like we're losing the -1 ATR channel. This is all very bearish, and lost the 50. So I will be getting out of Microsoft at the end of the day. Okay, Netflix. So I did buy Netflix back on the 12th of August when we had this higher low V1. Here is day one. Here is day two. Day two washes out day one, closes above day one. I did take a half position, so I'm grateful for that because it was under the 200 day. So, when things go against you, try to think positively. Try to think about the things that did go your way. I only took a half position. Twice as good as taking a full position in this case, right? So try to keep positive. You have to keep positive about this stuff, and don't berate yourself and get down on yourself, because after, it's just like calling a small child dumb. If you call them dumb, stupid, dumb all the time, that kid's going to believe it. Well, it's the same with you. If you say, damn it, why did I'm so stupid, took that, blah, blah, blah. Right? Don't do that. This is just part of trading. You're not always going to be right, but try to reinforce some positive and go, okay, I got out when I was supposed to, and I only took a half position. So try to keep your mental state good. So anyway, yesterday it did go up. We did hit one profit target, another thing to be thankful for. But today I am definitely going to be getting out of this. My plan on this was here was the low. We rallied, we broke to a new low, we went back up in the range, we tested the range, went back up. That's what I liked about it. But today we're losing the range. We're back into the old range. So I will be definitely getting out of Netflix today. We're at a 33.29 RSI. Who knows? If we tomorrow go under 30 and back over 30, I might re-enter. But for today, right now, it's definitely going to be definitely going to be getting out of this at the end of the day. Frederick says, my friend lost $5,000 with Forex and leverage and advised me to do the same instead of trade with small amounts of money. Yeah, I mean, you start trading Forex futures with all the leverage. You could get wiped out in a day, Frederick. I mean, just my recommendation to you is not to do that. Get some experience under belt trading stocks, understanding it, and getting experience. But you know how many people go into Forex with $5,000 or $10,000 and they lose all the time. They lose all the time. Hey, Brian 512's here. Hey, buddy, good to see you. Well, I'm glad Brian's seeing that the market does not always go up. Everybody, we have gotten the market has been going up for so long that everyone just thinks the market goes up all the time. It does not. I can promise you that. I've been through several big bear markets, and you have to be alert and you have to manage your trades because who knows, we could go down 10% from here, we could go down 20% from here, 100% we could. All right, so that's Netflix. We'll be getting out of Netflix with the close below the previous day's range. Philip Morris. So I did buy Philip Morris yesterday when we had this bulling engulfing bar, meaning that this bar went lower and higher than the previous day's range. We did move up against over all the moving averages. We were above 50. It's holding up fairly well today. It's only down 0.69%. So I will be keeping this one, actually. My stop on this one, all in all, here was probably the 100-day with the confluence of the -1 ATR channel. I could use the 20. I think it's a little tight, but it gives me a good risk to reward ratio, right? I mean, if I'm wrong, I'm wrong in this area. If I'm right, up somewhere in there. So it gives me 2-3 times the risk. But this one's showing some relative strength. I'm grateful for that. Really grateful to have something today that's going down just a little bit. SPY. All right. Well, as everybody knows, I do buy the SPY at the end of the day and I sell it first thing in the morning. I did buy it yesterday at 292.55 and sold it this morning at 288.05. So, pretty big hit overnight. But again, looking at the positive, sure glad I got out here than where it is right now. So, oh boy, did I lose my pictures? Yeah, so you might ask yourself, why do you buy the SPY every day in the afternoon and sell it in the morning? This is a study from Liz Ann Saunders at Bespoke Invest, but it's a very powerful study. If you would have bought the SPY in the morning at the open, sold it at the close in the afternoon every day since 1993, you would have actually lost 13.9%. But if you do the opposite, what I do, I buy the SPY at the close and I sell it first thing the next morning. I do this every single day. If you would have used this approach, which I do, you would have actually made 634.2% return since 1993 compared to a negative 13.9% if you bought it in the morning and sold it in the afternoon. So, there's a clear edge with using this system. It does not always work. You have periods where you have multi-week, multi-month, multi-year drawdowns, but I look at this as a very long-term trade with an edge. I position size correctly, so not one day like today can really hurt me, right? I only use a 10% position size. But it has a clear edge, and when you have a clear edge, you need to take that edge, but position size properly in case you run into a bad streak. But that is the reason why I buy the SPY each day at the close, sell it the very first thing the next morning. I've been using this since February 26th. You know, it has been profitable. It has beaten buy and hold since then. So I do like this approach, and I will be buying the SPY again today here at the close. So that is it for the current positions. Oh, let me see here. There we go. So listen, you know, I like to do every day, I just like to touch on a little trader psychology. I want to mention these things to you every day, because I know you hear it one day, it's not going to soak in, but what I'm trying to do is be repetitive so that you hear it every day, and hopefully, you know, you'll start internalizing some of these good sayings, because again, whether you're going to be successful or not comes down to the psychology and how you think about trading. It's not because you can hit a buy or a sell button. Anybody can do that, right? So this is from our good friend Thomas Payne at Trader T Payne on Twitter. He has a really good Twitter channel. You know, he puts out good information about trader psychology every day. I look at his channel every day, so I recommend that you follow him on Twitter. But he says your trading plan should be clearly defined so you do not have to think too much in the heat of the moment. This is what causes unnecessary mistakes and leave you saying coulda, woulda, shoulda, woulda, and I might add on the end here, if only. Coulda, woulda, shoulda, if only. And, you know, one of the nicest things, one of the best feelings in trading is knowing what you're going to do, having a clearly defined plan. If you don't have a plan, then at any second you can be, oh, should I get in? Should I get out? Should I take a little you know what I mean? It's too much work. It's too much mental work. There's no peace at all. It's a wonderful thing in trading when you actually have a plan. Even if you lose money on that trade, it's a nice, calming feeling having an if-then statement. If it does this, then I'm going to do that. If it does that, then I'm going to do this. And, you know, it's one of the small mercies in trading is having a good plan that you don't have to think a million times a minute. Should I here? Should I there? And just, you know, shooting from the hip. So I hope that makes sense. Your trading plan should be clearly defined so you do not have to think too much in the heat of the moment. This is what causes unnecessary mistakes and leaves you saying coulda, woulda, shoulda, if only, right? So get yourself a plan, free up your mind, free up the bandwidth in your brain about having to make million micro decisions all the time, and just get yourself a decent trading plan. Whether that's I'm holding this thing above the 200 and I'm not going to do anything unless it closes below the 200. That's a plan. That's a good plan, right? Mine's a little more involved than that with the phasing and the rejections and moving averages and so forth, but that's fine. You know, I rarely look at the market and go, oh, I don't know what to do, right? Because I have a plan. So get yourself a plan. It doesn't have to be sophisticated, just a plan, and then follow it and give some peace and mind to your mind. So again, that's Thomas Trader at Thomas Payne at Trader T Payne on Twitter. I really recommend that you subscribe to his channel and read his stuff and internalize it. All right, we are down a mere 745 points. My goodness, this is nasty. This is nasty. All right, let's see. All right, well, let's get through the watch list and see if there's anything on the docket today for something possibly for today. All right, so Apple, you know, we had the big sell. We had earnings, gapped up, moved back down. We moved back up. We rejected the 50. We moved sideways. It was strong yesterday. We had the news from President Trump about the tariffs not going on for cell phones or cell phone equipment. We had this huge day up, and then we have a huge day back down. You know, interestingly enough, this is much stronger than a lot of stocks in the market right now. It's still actually holding its 50 RSI, which is pretty impressive, and holding its 20-day moving average as well, and the 5-day. So there's really nothing for me here today. It is in the value zone, but I need some kind of trigger. You know, I could say, okay, I'm going to buy it right here, and I'm just going to get out if we lose the 50 RSI. I mean, it's a plan, right? It's a plan, but unfortunately, it's one of those plans that's an anticipatory plan. I don't like anticipatory plans. I like plans that, you know, it goes down, rejects, comes back up, right? Even if we got a V1 tomorrow, we went below here, rallied back up. At least that's telling me, the market's telling me that it just in real time rejected those prices instead of buying here right now and going, I think it's going to reject those prices, right? You're better with the former than the latter on that one. So nothing for me on Apple today, but it is noteworthy that it is holding the 50 RSI, and I mean, it's still in the channel compared to a lot of other tech stocks. Adobe had that nice rally off the 30, got rejected at the 20, came back down. It's a 39.52 RSI. You know, where would I be interested in Adobe? Well, I might be interested if we go below the 30 RSI, close back above, maybe have a V1, V2 outside of the third ATR channel, possibly back over. You know, there's also a good back tested approach for Adobe when the 10 EMA closes under the 50 EMA and then closes back up. You can see currently the 10 is under the 50. So if it closes back over 50, that would also be a possible entry. So again, you know, we were talking about if-then statements. If it goes under the 30 back over, I could possibly buy it. If we have a nice V1, V2 under the third ATR channel back over, I might buy it. If we have a 1050 EMA cross, I might buy it. But barring one of those entries, there is nothing here to buy, right? So nothing on Adobe. Silver, double leverage AGQ, having a good day up today. You know, we've kind of moved sideways for the last week or so. We're at elevated levels, 68.78. We made a high, we came down, we made a higher high. You can see this higher high has not as tall bars as the previous. So this is a double bottom with a bearish divergence. Doesn't mean to just go out and short it, but it is, you know, it seems like it's running out of a little bit of momentum. I would like to see the 5 cross under the 20 EMA and then back over. That would be one possible entry, or a pullback into the value zone here, the 1 and the -1 ATR channels, and look for a V1, V2. We did take that 520 cross back here on the 10th when we went the 5 under the 20 back over, and we had a beautiful trade, and we scaled out all the way to there, but nothing there today. Advanced Micro Devices, well, I mean, everybody wanted it, nobody wants it. It's always amazing to me. We did bounce off the 100-day moving average, which is good, but there really is nothing there. You know, there's just big down days on big volume. You know, maybe close under the 30 and back over the 30 might be something on Advanced Micro. Amazon, well, it looks like we're holding some support close to the 200-day moving average here. It's a 3509 RSI. I would be interested in buying Amazon if we went below the 200-day moving average, close below, and then close back above. Or even if we rejected it intraday and closed back above, because it would give me a good risk to reward. We did buy it here when it closed above the 250. My stop was a close under the 250, and or if it moved our way, a close under the previous day's low. Did move up nicely for us for a couple days. We phased out nicely, but I did get out of this back here when it closed below the previous day low. So it was a profitable trade all in all, again, because of the phasing out. Good thing we didn't take it yesterday. It did have a nice higher low V2, right? But if you guys remember, I said, okay, I'm going to buy Microsoft because I don't want too much tech. I don't want too much correlation. And luckily that was the case. So Right now, it's kind of in no man's land. Again, if it closed back above the 250, that would be another valid signal. Or if it closed under the 200 and back over the 200, that would be another quantified, profitable, long-term approach to trading Amazon. So, getting close to something, but not quite there yet. Boeing, making a new low there, 34 RSI, nothing there. Alibaba, not doing too poorly today, actually only down 0.73%. Did reject the 200, has earnings, looks like tomorrow, so nothing there. Well, Caterpillar, okay, so it's a potential for today. Let me just do the math real quick. And the reason it's a potential is at one point today we were under, well, we still are under a 30 RSI. We're at a 29.69 RSI. This doesn't look really great, but again, the under the 30 back over is a standalone, because it doesn't mean necessarily that it's going to go up, but if it does go down, you're going to be wrong small, and if it goes up, you have the potential for being up big. So this is a potential, but only if it closes above the 30 RSI. Let's look at the weekly. Well, we broke through that previous low. It's looking pretty nasty. So, but it is a potential. DDM, I will be getting out of that at the end of the day, because we lost the 250. Disney, again, we've lost the 100-day moving average. We're at a 37.34 RSI. I would be looking for a buy of Disney down under, if it went under the 30 RSI, back over the 30 RSI. Or another approach to Disney is the 1050 EMA cross. You can see the 10 is under the 50. If it cross back over, that would be another potential entry. But again, that's the plan. Wait for one of those two things to happen. Don't just buy it because you have a feeling that it's low enough. Might very well go up from here, who knows, but it doesn't give us a valid signal, so we need a valid signal. Etsy, 3266 RSI. If we went under 30 back over, might be an interesting time to get in. Nothing there. Ford Motor Company, it did go under 30 RSI today at one point. Looks like it's closing back above. I'm not going to buy this with the negative third ATR channel downward sloping above me, but just, somebody could take a valid signal here and buy because it went under the 30 and back over the 30. And if they're wrong, if it closes even 1 penny under 30, they're out for a small loss, but they have the potential for, having multiples of that loss to the upside for a profit if they're right. Doesn't mean it's going to stick there. It's just giving you a context and a landmark of going, okay, we did catch some support under 30. We did catch some support at the 200. I'm not going to buy it here, but that's the way I would approach that. The risk to reward here would make sense. Facebook getting really womped up on today, 4.65%. Again, where would I buy Facebook? I need a cross, a 1050 cross, or a close under the 30 and back over. So let's just be patient. 5 below, nothing going on there. Gold up higher earlier today. I want to see the 5 go under the 20 and back over. Or it moved back into the value zone. We had that exact trade, the 5 crossing over the 20 here, and we had a beautiful trade phased out all the way to there, but nothing today. Google, stronger than most. I did buy Google here on this V1, phased out nicely up to here. Then a couple days ago, we closed below the low of the previous day. I had to get out. Was a profitable trade still though, because I phased out. Did trigger another V2, higher low V2 here yesterday. I'm glad I didn't take it. We are under the 50 RSI, but compared to a lot of stocks, it's still in the value zone, which is good. But nothing on Google today. Goldman Sachs. flirting with that 200-day moving average, 35 RSI. I'm not going to buy anything here today. If it did close above the 200, you could take it, just use a close below, but I'd like to see this thing close under, go under the 30, back over 30, and ideally back over the 200. That would give me more confirmation. IBB is just getting beat up here, nothing there. Intel, big day yesterday, giving most of it back today. Russell 2000 catching a little support at this previous low. We've had some trades on the IWM. What I'm really looking for in IWM now is I'm looking for a 1050 cross back over. That's a good back tested approach. Another approach again would be a under 30 back over 30. You know, there are groups of buyers that are waiting for the 30. They're not stepping in here today because it's not quite there, just like I'm not stepping in because it's not quite there. So there's a very good chance that we'll hold at the 30. Not 100%, but there's a chance, right? But I want to be there where other buyers are coming in, and I don't think it's quite there yet for buyers to come in. Johnson & Johnson, we have that. We scaled out. We're going to have to get out today. Coca-Cola hanging in there. It's relatively strong. Nothing there. Lockheed Martin down today. Did have a nice, I think Max pointed this out. We had this nice V2 back here about a week ago. Did move up, move up, move up. If I was in this trade, this is the day that I would get out and lock in the profits. MasterCard, losing the 50-day moving average. It's a 46.49 RSI. Nothing there. We did have a nice trade here when we were where we waited and we were patient. It went under the 30 RSI, closed back above the 30 RSI, tagged the 100-day moving average. So some double confirmation that this was the low, and it certainly was. We scaled out all the way to here. We ran out of shares. Merck, again, we have that. This is still a profitable trade, even though we have a big down day because we scaled out. Microsoft, going to be getting out of that at the end of the day. So this was a one-day trade. But again, we made the trade, we got out, and we didn't let it grow into a big loss. That's the key. Remember, keep that garden free of weeds. And Microsoft is a big stinking weed right now. Netflix, in this, going to be getting out of this today for a loss, but you know, if it goes under 30 and back over in the coming days, I'll take a look at it again. Nike hanging on there by a thread at the 200, but nothing there. Philip Morris we have. This one's hung in there pretty nicely. PayPal, big day yesterday. I was considering buying this, but I did not, and I'm thankful for that. And remember, I did buy tech. I did buy Microsoft, but I didn't buy Microsoft and the Qs and Amazon. I mean, that's where you get hurt. You can have a conservative position size of 10, but if you take 4 of them, now you've got 4 in the same industry, right? The Qs lost its 100-day. I think it's very likely that we'll go down and test this. I mean, I would really like to be buying the Qs back at the 200 here and close to a 30 RSI. Snapchat, nothing. S&P, did buy that yesterday at the close. Got walloped at the open, but thankfully we sold it much, much higher. We sold it 4 points higher than it is now. So I will be buying this again at the end of the day. Square under the 30 RSI, nothing there. SSO is the double leverage SPY. We just talked about that. Bonds are, you know, one of the main reasons we're having such a big down day today is because the 10-year yield went below the 2-year. So we had a yield inversion, and the way the market looks at that is that, you know, it's a good sign we might have a recession coming. That's one of the reasons we're having such a big down day. But bonds hugely overbought here, but you know, they're seeking safety. Tesla, big down day, 6%. Twitter in the value zone. You know, we are moving sideways. I would look for a V1 or V2 here, but nothing today. Natural gas, it's kind of been dripping up here. Nothing there. UNH has had trouble with that 200-day moving average. Oil had a big day. up yesterday. Steve Burns, good call on that. Steve said he did not trust that, and he was 100% correct. So nothing there. We did buy oil back here though on the 7th when we went under. We hit the 30 RSI. We rallied strongly. We closed back up into the channel. Close was above the open, and we did have a nice 2-day trade. I did sell it there when it rejected the 10. But you know, sometimes you have these nice 1, 2, 3-day trades, and they do add up. So this was a nice trade there. The dollar. You know, I was looking for an entry on this one. I just didn't get it. We had a nice move up. We moved down. We certainly moved sideways, but I didn't get a valid V1 or V2, and it has moved from there. VIX, another big strong day. It looks like it's going to make a high here. I can't really get involved at this point. I did buy VIX back here when we had this beautiful V2. Rejected the third ATR channel, rejected the 30, closed back above both, had the nice V2, moved sideways for a couple days, and we had a monster trade. We scaled all the way out to, I think we scaled up to here, but it was about a 14% gain on VIX. So just be patient. Let's wait for something like that again. Verizon did close above the 200, closed back below, so nothing there. Walmart holding up pretty well considering we do have earnings coming up. But nothing on Walmart. XLE, we're to 29.36 RSI. So, you know, if we close back above the 30, it might be a valid entry, but it is not there now. Financials lost the 200-day. That is never good. Real estate moving down as well. We did make a higher high here, so I'd like to see this come into the value zone like it is doing. I'd like to see it move sideways and then get a V1, V2. Utilities down today. Healthcare also got whooped up on under its 200-day, so nothing there. A lot of volume. And pharmaceuticals. Look at the volume on this, everybody. We're to 34.28 RSI. So I do not see anything to buy today, actually, other than the possibility of Caterpillar with a close back above the 30. Who knows what's going to happen here. We're down 729 points, so we'll see if we get a rally, but I really don't see anything today, guys. I think I'm going to be 100% in cash as well, except for the SPY. Definitely going to be getting out of DDM with the close under the 200. Johnson & Johnson, the close under the previous day low and the moving averages. Merck, definitely going to be getting out of that, but that was a nice trade. Microsoft, I think we're rallying a little bit here at the end, a little bit. This is a 39-minute bar right now. Netflix with the loss of the range. Oh, I will not be all in cash. I will still have Philip Morris because Philip Morris is holding up. So yeah, we're going to be pretty light going into the close. Hey, Muritz here. How you doing, bud? Good to see you. Hope everything's going well over there in Norway. Interesting day, huh? Max, how you doing, Max? Max says, I got out yesterday of LMT. Looked climatic. Not at the top, unfortunately. That's all right. Yeah, it did look a little janky and a little indecisive. I'm glad you got out there, though. That was a great trade. Nice trade, Max. John said PM. Yeah. So I misspoke before. I said I'd be out of everything, but yes, I am keeping PM. I did get in yesterday. Underwater on the trade a little bit, but not too bad. This was a half. I think this was a half position. Yes. It was a half position. The reason why is because we had such a big bar up. It looked a little chasey, and I said, okay, I'm going to re-enter with the full position if I can get a close closer to the halfway of the bar. I could have done that earlier today in the middle of the day, but as you guys know, I like to wait till the end of the day. So am I going to add the full position here? Probably not. It's not that far away from my entry as well. All right, so let me just make sure I have everything programmed in here to get out of everything. Yes. And yes. And the only potential there today would be Caterpillar with the close back above the 30. Yeah, this is real trading, everybody. This is real volatility. This is real trading. I hope you guys remember this whenever you're starting to book profits and you're starting to feel kind of emboldened. Something like this can happen every day. And again, I know I apologize I say this, but guys, in order to be a good trader, you have to get the experience. And to get the experience, you have to do it for a long time. And to do it for a long time, you have to position size correctly so that you don't blow up your account. You know, I mean, in any other sport, any other endeavor, you have to do it for a long time to get experience. But in trading, the way to get experience is to trade. And the only way you can get experience is to trade for a long time. And you have to avoid blowing up your account. And the best way to do that, everybody, is not to take too large of position sizes. I know you guys get tired of hearing it. I get tired of saying it, trust me. But you know, I'm doing this with love. I'm trying to help you guys become better traders. And in my opinion, position sizing is the most important part of trading there is. It's the only thing you have control of. The only thing. So please keep that in mind. And my apologies for mentioning it over and over, but I'm going to continue to mention it. So tough. So where are we at? We're close to 800 down. Oy vey, man. This is brutal. Ramble Ron's here. Hey, buddy. Good to see you. Ramble says, what a day. I know, Ramble. It is quite a day. Murat says, I saw a nice tweet today. If you want to add another dimension to your overnight SPY, then you may try it. They didn't do SPY trade during the inversion days. Oh, maybe you could send me that tweet, Murat. Ramble says, say it more still. It's sinking in. Good. I'm glad. God, if you guys learn anything from this podcast, learn about position sizing and taking the long view. It's not about a secret formula. It's not about a secret trading method. There is no such thing. The secret is position sizing and getting experience and staying stable. That's what trading's about, everybody. All right. All right, so we're the final market of this final minute of this mess. Ramble says he's on lunch break. Oh, good. Well, thanks for taking the time on your lunch break to check in, Ramble. Don't you see the link? Oh, you know what? I'm not on Twitter right at the moment, Murat. Maybe you could message it to me on Twitter. All right. What do we have? We have about 20 seconds left. We're closing in on the 800 down mark. We'll be buying that SPY, and that is about it. And keeping our Philip Morris, getting rid of everything else. Oh boy. 807 points.
Order filled.
That's the market, everybody.
Order cancelled.
283.90 is my fill on the SPY. So Did buy there yesterday, sold here today. Thank God, right? So we did buy again at
Order cancelled.
283.90 for tomorrow. It's been tough sledding, man. It has been tough sledding all around the block. You know, yesterday I was a couple $100 away from my yearly high. Some kind of strange magic that when you get close there, something happens. But anyway, I mean, definitely not a couple $100 away from my yearly high now, but still within striking range. You know what I mean? It was a bad day today, but it wasn't, you know, it wasn't that bad for me. And that's because I didn't buy a lot of positions. I had the same correlation. I kept my position sizing small. I took half position sizes on a lot of stuff. So, you know, look, it's going to be volatile from here on out, I'm pretty sure. And, you know, what I mentioned, I think, which is worth repeating on these indexes and some of these monster stocks, is there should be groups of buyers coming in at the 30 RSI. There should be. And I want to wait until those buyers come in. They're sitting on the sidelines right now, just like I am. They're sitting on the sidelines waiting for those prices to come. So it's, you know, it's in purgatory. A lot of these stocks are in purgatory, and we'll have to see below us if there's some groups of buyers, and let's just wait for them to come in. So listen, if you guys have any comments or any questions about anything I discussed today, please let me know. But before I get to the answer, just want to put in my daily quick plug. Let everybody know I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. I've had really good success with my students. I think one of the main reasons why is, one, after I teach it to them, I make them teach it back to me. I really want to know that they understand it. And two, you know, I create a plan for them. A lot of people want to learn these technicals, but what I have found is they learn on the technicals, but they don't really put it into a plan based upon what's in their trading account, what their time availability is to trade. I mean, there, you know, there's tons of different trading approaches that can be created, but it's not one size fits all. It depends on how much money you have, how much availability you have. Do you want to be active trader? Do you want to be not such an active trader? And I think that's probably one of the main benefits of having the lessons with me, is that, one, I make you teach it back to me, and two, you know, I'll put together a customized plan for you based upon the variables that we talked about. So if it's of interest to you, please let me know. My hourly rates are in the description of this video, and my email is there as well. You can also send me a message on Twitter, and it usually just starts with a quick phone call. It's free, or a Skype call, but I want to know you better. I want to know how you got into trading, what your process is, what your challenges are, what your goals are, and then I'll put together a customized plan for you. And then lastly, as always, everybody, and I know I sound like a broken record, but if you liked this live stream today, if you're learning something, please, please, please do me a favor and hit the thumbs up button. It does help YouTube to promote the channel and get this channel out to more people. I do get a lot of emails from people telling me that this is really helping their trading. It helps them look at trading differently. You know, they've stopped the bleeding, they're making money, and that's good. And there's a lot of people out there that have a really difficult time with trading. It affects their family life, their emotional life, their financial life. And you know, that's the reason I started this channel, is I really, truly, and honestly want to help people stop losing money. So if you could hit the thumbs up button, maybe share it on social media, I'd appreciate it. So all right, there's my plug. That is out of the way. And so let's see. Murat says, do you see the link? Sent it here. Oh, no, I don't, Murat. I think on YouTube, sometimes when you try to send a link from somewhere else, sometimes it doesn't let you post it. But no, I do not see it. You can send it on Twitter. If you're on Twitter, I don't know. I did get a message request on Twitter from someone called Biggieberg. I don't know if that is you or not. Well, interesting day, guys. 800.49 down on the Dow. Congratulations, Steve Burns, for being in cash today. You're the master. And what a great feeling to be in cash when you have a day like this. I mean, you know, I know he's going to sit and wait, be patient, look for a really good setup, and that's really where he's going to make the alpha on the market. That is me. Okay. Brian512 says, wait, Greg, what's your Twitter? My Twitter is Gossett Trading and Mentoring. Excuse me. Man, I'm still getting over this flu. I mean, I'm done with the flu, but still having the aftermath. So, yeah, Brian, it's Gossett Trading. Here, I'll just type it in. So that's my Twitter channel there. Okay, so I see that, Mert. There's a wide range of lead times between curve inversions and recessions. A better tell during 2001, 2008 was when the 210 quickly steepened. Blue line equals exit stocks if 2 has steepened by more than 50 basis points over the past year. White line buy and hold. Yeah, that sounds like a good filter. I'll have to look at that a little bit more carefully. All right. Well, if anybody has any other questions, please let me know. I'm happy to answer them. If you want me to take a look at anything particular, or if you have, any other questions about trading in general, or any kind of issues that you're going through, let me know and let me see if I can help. Brian says, all right, I found it. You better subscribe, Brian. Max, good job on getting out of LMT yesterday. That's always a good feeling, isn't it? But don't worry about getting the top, Max. It's hard to get the top. It's almost impossible. But you got the meat of the move, right? That's the important part. You got the meat of the move, and a cherry on top. You missed out on the big dump today. All right, Brian, keep up the good work. Brian512, keep studying. If I can help you, just let me know. Really proud of Brian at 17 years old, coming to this channel and trying to learn. And you're going to be so far ahead of people your own age. It's going to be unbelievable. So, my best advice, Brian, is put some money away each month. I don't care if it's $1. I don't care if it's $5 or $50. Whatever you have, put it away. Get it out of your grubby, greedy little hands, and put it away. And there's lots of different approaches to investing in the market, but the main thing is that you put it away. Mert says, I have to take my dog outside. I think she felt the pressure of the market. Take care, Greg. Okay, buddy. Sounds good. Sounds good. Yep. I do the outside dog thing about 123 times a day with my puppy, so I totally understand. So, Murat, thank you for coming. Have a good day. Brian, good to see you, my friend. Ramble Ron, thank you for coming on your lunch break. I appreciate it. Frederick, hope you're doing well in France. Good to see you as always. John typed in PM, and so I hope I went over that. John, we are in Philip Morris. I did not get out today. It did hold up, but thank you for coming, John. I appreciate it. Max B, good seeing you. Mount Doji, good seeing you, my friend. Hope you're doing well and staying safe out there. And Steve Burns, as always, it's always an honor to have you here. And by the way, I'll talk about that tomorrow when we have more time. But Steve sent me some pictures of a book from Linda Raschke that she wanted him to read. And, you know, Linda Raschke is a market wizard, interviewed in the Market Wizard series. I've met her, really nice lady, but I'll show the book tomorrow during the middle. So I think that's it, everybody. I appreciate you all coming by. Thank you so much. Go out and do something nice. Let's stay safe, and let's wait for the market to give us some signals to get back in. All right. All right. You're certainly welcome, Brian. Okay, everybody. Take care. Have a good day, and hopefully see you tomorrow during the last hour of the market. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.